Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 20th, 2025, and we're diving into Sera Prognostics' fourth quarter and full year 2024 financial results. Sera Prognostics, known as the pregnancy company, focuses on improving maternal and neonatal health through innovative biomarker information. Joining us today is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. Sera Prognostics has been making strides in the healthcare sector, particularly with their preterm test, which is designed to predict preterm birth risks. I'm excited to discuss their latest financial performance and strategic initiatives.
Revenue and profitability overview. Let's start with the financials. Sera Prognostics reported a revenue of $24,000 for the fourth quarter of 2024, a decrease from $41,000 in the same period last year. John, what does this indicate about the company's current market position?
The decline in revenue suggests that Sera Prognostics is still in the early stages of commercializing its products. However, it's important to note that their focus is on long-term growth through strategic investments in product development and commercialization. The net loss of $8.6 million for the quarter reflects these ongoing investments.
And for the full year, they reported a revenue of $77,000 with a net loss of $32.9 million. How should investors interpret these figures?
While the revenue is modest, the reduction in net loss from $36.2 million in 2023 to $32.9 million in 2024 indicates that Sera is managing its expenses effectively. The company is prioritizing strategic initiatives that could drive future growth, such as expanding the adoption of their preterm test.
Strategic initiatives and market expansion. John, Sera Prognostics has been active in strategic initiatives, including the PRIME study and a significant fundraising effort. Can you elaborate on these developments?
Absolutely. The PRIME study showed promising results with a 25% reduction in neonatal morbidity and mortality index. This is a significant achievement and could enhance the credibility and adoption of their preterm test. Additionally, the $57.5 million raised in February 2025 extends their cash runway through 2028, providing financial stability to pursue expansion in the U.S. and European markets.
How do these initiatives position Sera Prognostics for future growth?
These initiatives are crucial for Sera's growth strategy. By leveraging the study results and the additional funds, Sera can accelerate its commercial efforts and potentially gain FDA approval for broader use of the preterm test. This could significantly increase their market presence and revenue potential.
Operational efficiencies and future outlook. Let's talk about operational efficiencies. Sera Prognostics reported total operating expenses of $36.7 million for 2024, down from $40.1 million in 2023. What does this tell us about their operational strategy?
This reduction in operating expenses indicates that Sera is effectively managing its costs while still investing in key areas like research and development, which was $14.7 million for the year. They've also streamlined their selling, general, and administrative expenses to $21.9 million, down from $24.7 million in 2023, which shows a disciplined approach to cost management.
And what about their future outlook?
With a strong focus on reducing healthcare costs associated with premature births, as highlighted by CEO Zhenya Lindgardt, Sera is well-positioned to make a significant impact in the healthcare sector. Their strategic initiatives and financial stability provide a solid foundation for future growth and expansion.
EPS forecast and analyst expectations. John, let's discuss the earnings per share. Analysts had forecasted an EPS of -23, but Sera reported an actual EPS of 25. What does this mean for the company?
The EPS miss by 2 cents, while not substantial, indicates that Sera is still navigating the challenges of scaling its operations and achieving profitability. With only one analyst covering the stock, the market's expectations are still forming, and the company has room to improve its financial performance as it executes its strategic plans.
How should investors view this EPS miss in the context of Sera's overall performance?
Investors should consider the broader context of Sera's strategic initiatives and long-term growth potential. While the EPS miss is a short-term concern, the company's focus on expanding its market presence and improving healthcare outcomes could drive future profitability and shareholder value.
Key takeaways. As we wrap up, let's summarize Sera Prognostics' performance. Despite a modest revenue of $77,000 for 2024 and a net loss of $32.9 million, the company has extended its cash runway through 2028 and achieved positive outcomes in the PRIME study. John, any final thoughts?
Sera Prognostics is in a transformative phase, focusing on strategic initiatives that could significantly enhance its market position. While the financials reflect the challenges of early-stage commercialization, the company's efforts in expanding its test adoption and improving healthcare outcomes are promising for long-term growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Sera Prognostics' performance in the comments below. Until next time.